Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Trump announces an Israel-Iran ceasefire, but neither side has confirmed the deal. A Philippine lawmaker urges the government to shore up economic defenses as the Middle East crisis threatens oil, trade, and inflation. Vice President Sara reveals Australia is being considered for her father's interim release from The Hague. We begin with breaking developments in the Middle East conflict. U.S. President Donald Trump has announced a ceasefire between Israel and Iran and is declaring the 12-day war over. In a late-night social media post, Trump said a total ceasefire would take effect within hours and called it a done deal. CNN reports the breakthrough came after Qatar's prime minister negotiated directly with Iran on Monday, prompting Trump to go public. But so far, neither Israel nor Iran has confirmed the truce. Meanwhile, Israel's military has issued new evacuation orders for parts of Tehran, telling residents in Mehran and District 6 to leave immediately ahead of planned operations. But even as ceasefire talks gain ground, tensions remain high on the ground. Also on Monday, Iran launched missiles toward a U.S. airbase in Qatar, just hours before Trump's ceasefire announcement. Qatar's Ministry of Foreign Affairs confirmed that air defense systems intercepted the missiles. Iran's Islamic Revolutionary Guard claimed responsibility, calling it part of a missile campaign dubbed the Annunciation of Victory, targeting U.S. bases in Iraq and Qatar. Qatar says there were no casualties. The Philippine embassy in Doha also confirms that no Filipinos were hurt in that attack. Let's now check on how global markets moved overnight as Middle East tensions raged and the U.S. Federal Reserve signaled rate relief. Wall Street rallied Monday after Fed officials hinted that rate cuts could begin as early as July. That helped offset fears that Iran might disrupt crude supply in the Gulf amid escalating conflict with Israel. The two countries earlier agreed to a 12-hour ceasefire. Fed Vice Chair Michelle Bowman said it's time to start adjusting policy as job market risks now outweigh tariff-driven inflation. Chicago Fed President Austin Goolsbee added that the economic impact of tariffs has been more modest than expected. Markets are now pricing in two 25 basis point cuts this year, with the first seen by September.
The market is up. It's been showing a lot of resilience, especially in the face of the U.S. Airstrikes, on Iran, and then obviously now we've had a little bit of a response back from Iran. I think there's just some hope that this is going to be, limited and maybe the start of some form of de-escalation. I think the reason the market's up, however, is also just we've had a lot of anxiety and anticipation about how this was going to play out. So seeing at least this start of a de-escalation process, in other words, a significant strike, and then kind of getting the news over with, a lot of times does sort of set the stage for a little bit of a relief rally.
The Dow Jones Industrial Average higher by 0.9%, the S&P 500 higher by 1%, and the Nasdaq up by 1% as well. Now, European markets closed lower. The FTSE 100 slipped 0.2%. Germany's DAX fell by 0.4%, and France's CAC 40 lower by 0.7%. Philippine lawmakers are sounding the alarm, saying it's time to shore up our economic defenses. Congressman Joey Salceda says that the government must now build oil shocks into its budget strategy and ramp up funds for social protection. He warns that even without full-scale war, threats in the Red Sea and near strategic trade routes could send shipping costs soaring. And for a country that imports most of its food and fuel, that spells higher prices ahead. And now a new flashpoint that could deal a devastating blow to Asian economies, including the Philippines. The Strait of Hormuz, a critical artery for global oil and gas, is now at risk of being shut down. Philexport President Sergio Ortiz Luis Jr. warns that any closure could trigger oil shortages and a fresh wave of price spikes with disastrous consequences for import-dependent countries like the Philippines. Even without a full shutdown, he says rising oil prices are already a mounting threat. With the chances of a complete blockade remain uncertain, Ortiz Luis remains hopeful that Iran will hold back, knowing the global backlash could be swift and severe. The final call now rests with Iran's Supreme National Security Council after lawmakers in Tehran reportedly backed a plan to close the strait in retaliation for U.S. strikes on its nuclear facilities. And for motorists, the strain is only getting worse. 2 fuel price hikes in just 1 week are adding to the pressure. Starting today, industry sources say gasoline prices are up by 1 peso and 75 centavos per liter, diesel by 2 pesos and 60 centavos per liter, and kerosene by 2 pesos and 40 centavos. And that's not all. Another increase hits this Thursday, June 26, bringing the total weekly hike to 3 pesos and 50 centavos for gasoline, 5 pesos and 20 centavos for diesel, and nearly 5 pesos for kerosene. The price adjustments will be implemented in tranches after the Energy Department requested oil firms to stagger the increases and avoid a sudden spike at the pumps. With fuel prices spiking, the pressure is now on Malacanang to step in. A party list group is calling on President Marcos to immediately suspend the 12% VAT on petroleum products. Gabriela Representative Arlene Brosa says dropping the VAT could ease the burden on Filipinos already struggling with surging food and transport costs. He warns that the latest oil price hikes could spark a fresh wave of inflation, pushing basic goods even further out of reach for ordinary families. As global oil prices climb, the Philippine government is moving to shield vulnerable sectors from the impact. The Department of Transportation is now finalizing guidelines for a fuel subsidy program aimed at helping PUV drivers and avoiding any fare hikes. At the same time, the Agriculture Department says it has funds ready to support farmers and fishers as fertilizer costs are expected to rise alongside global crude prices.
Meron naman tayo din nasa budget natin na fuel subsidy for fishermen. Malamang i-release din natin yun once na tumaas na. Meron naman mga QRF din kung kaya, doon natin kukunin. Pero tintayin natin yung programa ng DOE sa fuel subsidy.
And as tensions in the Middle East continue to escalate, Malacanang says it's moving swiftly to protect Filipinos on the ground. President Bongbong Marcos assures the public that the government is acting with urgency to ensure the safety and repatriation of Filipinos in Israel and Iran. In a recorded message, Marcos confirmed that Alert Level 3 has been raised in both countries, activating the voluntary repatriation program. He also said Migrant Workers Secretary Hans Leo Kakdak is now in Amman, Jordan, to oversee operations and provide direct assistance to OFWs who want to return home.
We are processing over 200 requests for repatriation, and we are moving quickly to bring them home, while others have opted to remain at work. We continue to monitor our OFW caregiver, who remains in hospital, stable but still on oxygen support and a ventilator. We are in touch with her family and are making sure she gets the care that she needs. In Iran, our embassy is preparing for the repatriation of an initial batch of 8 Filipinos in the coming days. Upon arrival in the Philippines, they will receive immediate support from the government, including 150,000 pesos in immediate assistance, some accommodation, transport, and livelihood support with training vouchers to help them recover and to start again. And for those who choose to stay home for good, we will be there to help with skills training, job matching, startup capital, and support to begin a small business or find new opportunities.
A new remittance tax from U.S. President Donald Trump could deal a fresh blow to the Philippine economy. Deutsche Bank warns that Trump's One Big Beautiful Bill, which proposes a levy on money sent abroad, could cut Philippine remittances by 1.4%. The U.S. is our single largest source of remittance inflows, making up 41% of that total. A drop there could hit household spending, just as inflation ticks up and put more pressure on our current account. Still, the BSP is sticking to its forecast, expecting remittances to grow 2.8% this year. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Tuesday morning. Right now, let's take a look at the Nikkei 225 following the gains in Wall Street overnight. The Nikkei 225 is higher, up by 1.4%. Hong Kong Hang Seng Index is well entrenched in positive territory as well, up by 1.7%. Shanghai's Composite up by 0.9%, and Singapore's Straits Times Index up by 0.7%. Here at home, Philippine stocks tumbled yesterday as fears of a regional war and oil supply disruptions triggered a global flight to safety. The PSC index plunged nearly 2% to 62.18, its lowest level since March, after the U.S. bombed Iran's nuclear facilities. Value turnover reached 6.3 billion pesos. With the Strait of Hormuz in play, traders are expected to stay risk-off in the days ahead. Now, taking a look at our market this morning as of 10:17, the main gauge is in the green following yesterday's steep losses at 2%. The market's up by 1.72% to 63.24. Back at the 6,300 level, all shares index up as well, up by 1.3% to 37.53. As for the sub-indices, all are trading in the green except for the mining and oil counter, which is slightly limiting the market's advance. Really up sharply following yesterday's sell-off, especially the financial counter, which is up by 2.9% in early trade. Volume of shares traded is at 110 million. Value just a little under $1 billion. Market breadth is very bullish. We've got 82 advancers, 37 decliners, and 49 stocks unchanged. So it looks like this rally we're seeing this morning has some legs. Now, at the currency market, the peso opened stronger at 57.20, to the dollar appreciating from the previous close of 57.58. Now, the pressure is building at the pumps in the currency market and possibly on monetary policy. With global oil supply at risk, the peso under fire, and inflation expected to climb, the big question now is what comes next for the Philippine economy? Joining us now to break it all down is Jonas Ravelas, the Senior Advisor at Reyes Tacandong & Co. Hi, Jonas. Thank you for joining us.
Good morning, Maiki.
Okay, Jonas, Trump is now declaring a ceasefire between Israel and Iran, but both sides need to confirm this. How should our policymakers and business leaders position for a best and worst case scenario, bearing in mind that all of this is going to have a huge impact on oil, peso, inflation, and GDP?
Well, basically, I guess the key word is more of you have to be nimble, and at the same time, you have to be able to anticipate any changes. So I think the BSP has been ahead in trying to cut policy rates to ensure that growth is sustainable, especially after the first quarter of 5.4%, inflation slowly coming down. I think we can probably say that there's still one more cut before end of the year, assuming that we're not going to see any spikes in inflation. So that should be a good leeway for the economy to try to target a 6% growth this year.
Mm-hmm. All right. So on to as with monetary policy, we've already cut interest rates twice this year. You're saying another rate cut is expected. To what amount, Jonas?
Probably just another quarter. So that would bring us to 5%.
So that's in August. The BSP is going to be meeting again in October. Too soon to tell how that's going to turn out, especially how everything is going right now. But given, where we are, GDP in the first quarter came in very dismally at 5.4%. Where do you think our trajectory, where do you think we're headed, given everything that's going on right now?
Okay. Well, basically, I'm still looking. I'm still optimistic at 6%. I think one of the things that we're seeing right now is that the trajectory of inflation is still headed lower. We're actually below the 2%. If we're able to sustain all the fiscal and the supervision of, or shall I say, the guidance of the BSP on inflation, we could probably sustain a growth rate of closer to 6%. You need to understand last year they've done 75. So that should help bring down cost of doing business. I think first quarter was really more of, people took a wait and see because of Trump's tariffs. So, but in the second quarter, we've seen that hopefully a little bit of election spending and the tailwinds of that should at least bring us closer to 6% by end of the year.
All right, that's at the bottom end of the government's 6 to 8% target range for GDP. Taking a look at inflation, if oil shocks bleed into transport and food inflation, given everything that's going on now, we're not going to see that until July, right? So taking a look at June inflation, coming off at 1.3% from May, where do you forecast June inflation and then July, given all the uncertainty that's happening right now and the increases at the pump prices?
Well, basically, for June, I was actually looking at 1.2%, and probably in July, probably slowly inching higher, closer to 1.5%.
Okay, 1.5% inflation. That said, what is the possibility that the BSP might increase interest rates by 2 times in the second half?
Oh, I don't think any rate hikes will be there. Probably a rate cut, one rate cut, and probably if we find out what happens after July 8th, what happens to Trump's tariffs, then if it will have minimal effects, then definitely we could probably see a cut in October.
Okay, talking about the peso, it just hit its weakest level in nearly 3 months, closing at 57.45. We're going to be bracing for higher import costs and a wider trade gap with everything going on. What's your outlook for the peso?
Okay, I think the second half of the year is a bit tricky compared to probably what we saw in the first half. There are a lot of uncertainties arising, particularly whether we talk about oil prices, geopolitical risk. But I think one of the things that people forgot is that we're nearing the end of Trump's pause. Whether he extends it or not, we've already seen some impact on the tariff, and that means slightly higher prices. So whether we still have a pause or we get to see the effects for the Philippines, the secondary inflationary and currency volatility could affect us in the second half. And that's the reason why my year end is actually at 58.90 for the peso.
Coming into the second half, how worried are you about stagflation when inflation picks up, even as growth slows? And this is for the domestic economy and for the global economy.
Well, I think for the Philippines, I'm not as worried, mainly because we still have, again, we're trying to balance infrastructure spending with fiscal consolidation. And, compared to the growth, we're still growing at, in the region, we're still growing above 5%, or our first quarter was 5.4. But globally, yes, it could have an impact, especially if we get to see commodity prices, having an upside bias.
Yeah, with that slight upside bias for commodity prices, you pegged June inflation at 1.2%, July inflation at 1.5%. Given that, coupled with a lower interest rate environment, what's your outlook for corporate earnings for the third quarter of the year?
Well, basically, I think for the third quarter, we could see more improvements, probably closer to 10%, especially if you recall last year, we had 75 basis points. So this will actually already see the benefits of lower interest rates. So this could actually continue to give them that potential increase of at least 10%.
Now, given the potential for lower interest rates, 75 basis point cut, and possibly for the balance of for the whole year, what's the strategy call for investors right now? What are the biggest opportunities at hand, and what are the mistakes to avoid?
Well, basically, I think the first thing investors should realize is that they should always be invested. Otherwise, they'll be losing out. So, for investors, you need to realize that the 1.4% or the 1.3% inflation is just a gauge. However, you can gauge your own inflation. So, whether it's 10% or 12%, you need to be worried of that because you need to look for investment outlets that will give you a yield much higher than the inflation that you have. So at present, the stock market offers blue chip companies, especially after the drop yesterday. Companies like PLDT, Meralco, and Globe offers high dividend yields. Of course, there are the REITs that also offer these dividend yields. What's nice about this is that over a period of time, probably 3 to 5 years from now, you get to see a recovery and you have a potential 20% rally. So you want to take advantage of these low prices to slowly accumulate this type of issues.
Yeah, the stability of the blue chips and the dividend plays are always a good bet. Thank you so much, Jonas Ravella, Senior Advisor at Reyes Tacandong, for your insights this morning.
Thank you, Mikey. Thank you for having me. Have a great day.
And we're going to be taking a quick break. Business 360 will be right back. Welcome back. As the government cracks down on oil prices and remittance risks, it's also getting tougher on digital commerce. The Department of Trade and Industry has begun full enforcement of the Internet Transactions Act of 2023, imposing strict new rules on online sellers and platforms. Under the law, the DTI now has power to issue takedown orders on illegal online listings and hold platforms accountable for violations by their sellers. E-commerce sites must now display full product details, including price, condition, and seller contact information, or face penalties. The law also mandates secure payment options, stronger data privacy, and clear consumer complaint channels. To boost confidence in the digital space, the DTI is developing a Philippine e-commerce trust mark, a seal of legitimate, compliant online businesses. On another front, Agriculture Secretary Francisco Tu Laurel Jr. plans to ask President Marcos for an executive order to formally establish the DA's own enforcement arm. The move comes after criticism that the Department of Agriculture is clueless in combating agri-smuggling. Tu Laurel admits the DA knows where illegal activities are happening, but has no power to act without law enforcement backup. He's now pushing to create a special unit, the DA Inspectorate and Enforcement, or DAIE, to go after smugglers directly. Right now, the DA must coordinate with other agencies for joint inspections and raids, a process that often delays enforcement action. Another supply-side headache for Philippine businesses. The Department of Agriculture is putting on hold its plan to lower the price cap on imported rice amid escalating tensions in the Middle East. The DA was set to reduce the MSRP from 45 pesos to 43 pesos per kilo starting July 1st.
Mukhang i-hold ko muna in abeyance, no, because of the situation magulo eh. Diba? We don't want to have any market shock, so most likely by next week magde-decide na tayo na whether tutuloy o hindi. But the chances are i-hold ko muna ng 1 month or 2 months.
The price of imported pork is also facing upward pressure, with the DA still determining a reasonable cap to contain food inflation.
Hindi ko pa rin ngayon mailagay kung magkano ba talaga yan because of the main factor naman sa frozen pork, while pork is much cheaper than imported pork is much cheaper than local pork, yung freight issue ngayon ang kailangan tignan kasi baka tumaas yung freight ng few $100s per ton sa international freight, then that will affect the imported pork prices then.
With Iran threatening to close the Strait of Hormuz, a major global trade route, the DA says it's trying to soften the blow for Filipino consumers. For the business community, it's a signal to watch global supply risks closely. Food cost volatility could tighten margins across agribusiness, retail, and consumer goods. Vice President Sara Duterte pleads not guilty and moves to dismiss the fourth impeachment case filed against her. In her formal response to the Senate, Duterte argues the complaint is invalid, saying it violates the one-year bar rule and should be thrown out. She also questions the Senate's jurisdiction, pointing to the return of the articles of impeachment to the House. She says her right to due process was violated, claiming she had no chance to defend herself before the case reached trial. The stakes are high, with political uncertainty looming over the country's second highest office. And as the vice president fights her own political battles, she's also pushing for her father's freedom. Australia is now being considered as a possible host country for former President Rodrigo Duterte, who currently is detained at The Hague. Vice President Sara Duterte made that revelation during an interview in Melbourne. Speaking at a rally calling for her father's release, Duterte said she sent an informal message to Australian Foreign Minister Penny Wong, but they didn't get to meet. She hopes to talk to Australian officials in her next visit. Meanwhile, the former president's lawyers have asked the International Criminal Court to grant interim release, saying a country is ready to receive him. No confirmation yet from Canberra, but it's a new twist in a high-stakes case with global implications. We're taking a quick breather. Business 360 will be right back. Welcome back. The U.S. Supreme Court gives President Donald Trump a major win on immigration policy. The court lifted a lower court order that had required the government to give migrants facing deportation to third countries a chance to argue they'd face torture there. With that order gone, the Trump administration can now resume deporting migrants to countries other than their own without offering them that protection. The court's majority gave no explanation. But in a fiery dissent, Justice Sonia Sotomayor, joined by two liberal justices, called the move a gross abuse of power and accused the court of rewarding lawlessness. On another front, onto a humanitarian crisis, tensions in the Middle East continue to escalate. Several Palestinians have been wounded while trying to get supplies from aid trucks in Gaza. People climbing onto aid trucks are just trying to get food. Israel has allowed limited deliveries into Gaza through a new foundation backed by the U.S. and the Israeli government. But dozens have already been killed by Israeli fire while attempting to reach these convoys, including those brought in by the United Nations and other aid groups. Now, the European Union's top diplomat says she'll raise human rights concerns directly with Israeli officials. As the violence in the Middle East spreads shockwaves around the world, calls for de-escalation are growing louder. In London, demonstrators gathered to protest the escalating conflict. Barred from protesting directly outside the embassy, they took to the riverbank across the street, Iranian and Palestinian flags flying high in defiance. In stark contrast, a lone U.S. flag stood at the embassy as demonstrators condemned the American missile strikes on Iran's nuclear sites. Similar protests have erupted in cities worldwide as global pressure mounts for both sides to stand down. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.